Ladies and gentlemen, Panda Trader here, welcome back. Today we're not looking at one single session, we are building a complete game plan for the week ahead. In this video, we will review what happens last week, we will look at where price is sitting right now, and we will build a trading plan using the weekly chart, the daily chart, the 4-hour chart, and the 1-hour chart. As always, everything I show you today comes directly from the charts in front of me. No news, no predictions, no guessing, just liquidity, just structure and price action. Let's get into it. Right now, gold is sitting inside a strong upward move on the lower time frame after a long period of correction on the higher time frames. So we have two things happening at once. On the bigger picture, price is recovering from a deep pullback. On the smaller picture, price is expanding higher with strong bullish candles. We will break all of this down time frame by time frame. Looking at the daily chart, price started the week trading in the low of around 4,200 areas, coming out a long consolidation. From there, we saw a very strong push higher. One of the daily candles alone moved price from around 4,350 up to around 4,530. That's a big aggressive bullish candle. By the end of the week, price closed near 4,600. which is close to where we are trading right now. So overall, last week was clearly a bullish week. Buyers were in control for almost the entire week, and price is now trading close to its highest point in several weeks. Let's zoom all the way to the weekly chart. From last year into early this year, gold was in a long, strong uptrend, moving from around 2,700 all the way up to a peak near 5,400. After that peak, we got a sharp and heavy correction. Price dropped down that 5,400 area all the way down to around 4,000, and it spent several weeks building a base in that 4,000 to 4,200 region. Now, on the most recent two weekly candles, we can see strong bullish momentum returning. Price has put back up from that base and is now closing near 4,600. This tells us buyers are step back in after the correction. In terms of structure, the bigger picture uptrend is still intact. If we look at the full range from 2,700 to 5,400, this recent move down to 4,000 was a deep pullback inside the larger uptrend, and now we are seeing the first real signs of recovery. I do not see any premium or discount zone marked on this weekly chart, so I'm not going to guess one. What I can say clearly is that the weekly close is strong, and it favors a bullish view heading into next week, as long as price holds above that recent base near the 4,000. Moving back to the daily chart, back in May, price was trading of near 4,650 to 4,750, and that area acted as a ceiling. From there, we saw a long decline through May and June, dropping all the way down to around 3,950 to 4,000 in early July. After that low, price moved sideways for most of July, trading in a range roughly between 4,000 and 4,200. This was a period of consolidation with no strong direction. Then in August, the character of the market changed. We saw a series of strong bullish candles pushing price higher step by step from around 4,100 up through 4,250, 4,350, 4,400, and now up to around 4,600 here. So does the daily chart agree with the weekly bias? Yes, it does. Both time frames are showing the same story, a deep correction followed by a strong recovery. The daily chart is now approaching the general area where price topped out back in May, so this is a zone worth watching closely because it is the last major resistance area visible on this chart before price would be trading into new territory. Now let's move to the 4-hour chart, which is our execution time frame for the week. Starting from the 7th of the month, price were consolidating between roughly 4,250 and 4,000 4,300. Then we got some choppy, routed price action between 4,350 and 4,425, with a dip down toward 4,325 around the 14. After that dip, price pulled back again into the 4,330 to 4,350 area around the 18th and 19th. This is where things changed. We got a large impulsive bullish 4-hour candle that pushed price from around 4,350 up to 4,450. That single candle broke the recent structure to the upside. From there, price kept printing higher highs and higher lows on the way into this week, moving from around 4,450 up to a recent high near 4,632. The most recent candle right here in the chart is a bearish one, pulling back slightly from that high down to our current price of 4,602. So this move looks impulsive, not corrective. We have clean higher highs and higher lows, one strong breakdown candle, and now a small pullback. This 4-hour structure confirms the bullish bias we saw on the weekly and the daily charts. There is no rejection or reversal signal here yet, just a normal pulse after a strong push higher. Now let's build the actual plan using the 1-hour chart, since this chart already has some structure math on it. On the left side, we can see a bullish channel right here from around 14th to the 17th, showing a clean, controlled uptrend. After that channel, price moved into a period of consolidation. Then we can see a change of character marked directly on the chart around the 19th, where price broke the recent short-term high and shifted into a stronger bullish phase. Right after the change of character, a large fair value gap formed from roughly between 4,380 and around 4,420. This gap lines up with the start of the big impulsive move, so it is a zone I'm watching as possible demand area if price ever trades back down that far. As price continued higher, a second, smaller fair value gap forms closest to the 4,500 to 4,520 area. The top of this smaller gap is marked at 4,510.765, and this is the current nearest support zone below the price. Above the current price, there is a marked level at 4,632, which lines up with the recent high. There is also a level at 4,563, which sits between our current price and that smaller fair value gap, right here as you can see. Further down, there is a level marked at 4,450, just above the larger fair value gap. So, reading this chart, my potential buying area is between roughly 4,563 and 4,510, where the smaller fair value gap sits. My potential selling area, if I were looking for a short-term pullback trade, would be up near 4,632, where price already shows some distraction. And I'm not going to enter blindly at either of these areas. I need confirmation first, something like a smaller change of character on a lower time frame once price reaches the zone. My main scenario for the week is still bullish. The weekly chart is recovering from a deep correction. The daily chart is confirming that recovery, and the 4-hour chart is showing a clean impulsive structure to the upside. On the 1-hour chart, I want to see price pull back into the 4,563 to 4,510 area, ideally tapping into that smaller fair value gap before continuing higher. For this scenario to play out, I need to see price react as zone with some kind of bullish confirmation, not just touch it and keep falling. If that confirmation shows up, my bias for prices to move back up toward the 4,632 area and potentially beyond it. This is my main scenario because every time frame I looked at today is pointing in the same direction, from the weekly on the way down to the 1-hour. Now what would change this plan? If price breaks down to the 4,450 level and starts trading into and through that larger fair value gap, right here as you can see, near the 4,380 to 4,420. That will tell me the bullish structure on the 1 hour chart is breaking down. That kind of move would shift my short-term bias from bullish to neutral, and I would need to step back and reassess from the 4 hour chart before considering any new short-term direction. I'm not forecasting this outcome, I'm simply stating that what would have to happen for my current plan to be invalidated. I will not chase price if it keeps running higher without giving me a pullback into my zone. I will not enter in the middle of the range between my buy zone and my sell zone because that is where the risk to reward does not make sense. I will wait for price to reach one of my marked areas and I will wait for confirmation before linking anything. If price never comes back to my level this week, and that's completely fine. I simply do not force a trade. Before taking any trade this week, I'm going through this checklist. First, is the weekly bias still bullish, or meaning price is still holding above that recovery base? Does the daily chart still agree with that bullish view? Has the 4 hour chart continued to show higher highs and higher lows, or has the structure broken? Has the 1 hour chart given me a clear confirmation at my buy zone or my sell zone? Am I trading into the direction of where liquidity is likely resting and rather than against it? I don't have any clear premium or discount zone marked on this chart, so that is not my part of checklist of this week, and I would rather leave it out than yes. A quick reminder before we close out, always wait for your confirmation before entering anything here. Always protect your capital first. Always use a stop loss on every single trade. No exceptions, no eyeglasses, including this one, is a guarantee of what price will do. This video is for educational purposes only, and it reflects my own personal reading of these charts. That is my complete trading plan for the week ahead. Trade patiently, let the market come to your levels, and do not force anything that is not here. If you enjoy this kind of weekly breakdown, go ahead and subscribe to the channel. I also post a 1 hour updates during the week to track how these levels are playing out. See you next video.